do I actually get any of that back, right? Like if I stake on Ethereum or Solana, like what happens? Do I actually make money? What's kind of the upside?
So censorship resistant is a very clear, very important property.
It would be remiss to not talk about the elephant in the room today, which is Mert's prolific shit posting over the last 3 to 4 days. I mean, with the market in the gutter.
You joined Solana because it had this mission of trying to be the world computer. Like, I thought that was the Ethereum vision. What happened?
Welcome back to the Rollup, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. What's going on, guys? Welcome back to the Rollup. Today we have our friends Mert and Armani to discuss the impossible growth of Backpack, the story of the fat wallet thesis, updates on Solana, macro, and what's going on in the space. So, guys, welcome on. Armani, Mert, good to have you guys.
Yeah, thanks for having us.
Yes, sir. It's your first time. Mert's been on once, so we'd love to just get an understanding of your intricate background through some of the interesting characters that you've worked with in the past that led you to build Backpack. So, yeah, man, welcome.
Yeah, sure thing. So I suppose on the one hand, I have kind of a normal journey. On the other hand, I have a bit of an abnormal or quite an abnormal journey. So yeah, I got into crypto in 2017. Basically, Ethereum bull market was, the price was going up and up. I was sitting in my kind of job, office at Apple. People were trading. I read the Ethereum white paper, got nerd sniped, and I suppose kind of jumped ship, and kind of the rest is history. My first job, actually, I wanted to work on smart contracts on Ethereum in like 2017, 2018. Purely by accident, I ended up at this little trading firm in Berkeley, California called Alameda Research. This is before FTX. And basically kind of ended up there by accident, worked on the trading systems for about 3 months. Pretty quickly knew I did not want to work there, surprisingly, and then left. So this is kind of before the whole FTX story, when Sam and a bunch of folks from Jane Street basically were just doing a bunch of trades through Korea and on all the early exchanges back in the day. But I basically kind of went through kind of Ethereum, worked on some L2 tech, worked on state channels for a bit. Worked on some other L1s. I got really kind of interested and inspired at the whole kind of scaling problem, like a lot of people did back in the day, and kind of had this windy path working on a bunch of open source tech. And in 2020, once FTX and Alameda started investing into Solana, they basically called me up again, and they were like, "Hey, I know you don't want to kind of work on the exchange or on the trading systems or whatever, but what if we just paid you to kind of work on Solana stuff?" And so that's kind of how I got introduced into Solana. I kind of started taking a look at it, and met a bunch of folks there, got really excited, thought it was kind of the coolest crypto project at the time, kind of the first people to actually start genuinely fulfilling, I think, the dream of the world computer that I think brought a lot of us into the space. And I mean, there's a ton of stuff that we can talk about, but that was my introduction to Solana, and I suppose some of the background context with me and crypto.
We all got
and
fooled,
you created
huh?
Anchor, by the way. I don't know if
What's
you guys know
Anchor?
what Anchor is, but that's what's the equivalent on EVM, Armani?
It's there's no like one-to-one mapping because there's just a bunch of other tools. It's kind of like the equivalent of like Solidity and Foundry and kind of these, the early Truffle, if you want to go way back in the day. But yeah, I worked on a bunch of the early Solana stuff, a lot of early wallet tooling, a lot of early DeFi, a lot of developer tooling. Been in deep
Awesome.
in NFT land. Yeah.
Yeah, man. And did you ever meet Caroline Ellison or Sam Trabucco?
Yeah, I met both of them.
Oh yeah, what was your initial reaction, like first impressions?
I mean, Caroline seemed pretty normal when I first met her, to be honest. I mean, I never really worked closely with either of them, so I wouldn't say I intimately knew them. I kind of met them more through social settings. Yeah, Trabucco kind of always felt like I don't know, very like extra, for lack of a better word. Like he liked stuff, buying boats and having nice, things and spending money and things like that. I don't know. They're traders. I didn't really have like a ton of insight into them as individuals, to be honest.
We won't be on FTX this whole time, but what you said like early on, there was something or you felt something that was like, okay, I don't want to work here for an extended period of time. What was that?
I mean, look, Sam was a trader, right? I'm an engineer. When you work at a company run by traders, traders are kind of, it's through the lens of trading, right? It's through the lens of how do I make the maximum amount of money by any means possible. And that just like wasn't kind of my thing, right? I left my job at Apple because I wanted to work on like open source tech. I think like an engineer, I'm an engineer. Backpack's kind of built kind of like a traditional kind of engineering driven company. I think it's just, the culture is very much about product and building great things for users. I think that was kind of, really what it is, right? I always kind of viewed Alameda and FTX as having, I don't want to be like too disrespectful or anything like that, but it felt like a sloppy engineering culture, and that just wasn't something I wanted to be a part of.
Yeah, that's very much the two sides here of cryptos, the financial and then also the technological. So switching gears a little bit to the technological, you joined Solana because it had this mission of trying to be the world computer. Like, I thought that was the Ethereum vision. What happened?
Yeah. I think there's so many different ways you can slice this. I think for me, so I was working on estate channels and L2 stuff like back in the 2018, 2019. This was when Ethereum was really kind of gung-ho around the whole like sharding Serenity design. And I very quickly saw that and thought, this is not going to work. Like, this is a terrible idea. Like sharding isn't scaling by any like traditional sense of like the definition of scaling. Like really the technical property that you want is linear, like horizontal scaling with respect to some resource. Like you had more traditional databases like, DynamoDB or, Cassandra, or like the kind of the innovative like NoSQL databases where you just throw more machines at the problem and the thing like infinitely scales, right? That's like what you learn when you get first introduced into like more advanced like database kind of research. And then with Solana, they were really the first ones to do that with respect to kind of like machine resources. So you throw more cores at the problem, Moore's law at the problem, as kind of these machines get bigger, stronger, faster, whatever, you get more and more throughput in the system, right? You have parallelism, pipelining, all these techniques. And as an engineer, this was, Mert probably had the exact same thought process. This is so obvious. Like, it is so painfully obvious that you cannot have a single threaded virtual machine. If you go to like ask any engineer in San Francisco this, they'll all tell you the exact same thing. And this was really what people were chasing kind of out of that 2017, 2018 bull cycle, where you basically had, every professor coin get funded. You had, all these people that were, a lot of really smart people that were looking to solve the scaling problem or whatever. You had, later you had, Sui and Aptos, and now you have, Say and Monad and all these folks. But it really was, about applying very sensible, relatively well understood modern systems techniques to the context of blockchain. And so it was like pretty obvious, honestly, at the time. It was just a function of execution and who actually had the, the engineering chops to pull it off. And Solana was really the first one to do it at scale. Ethereum was kind of like obviously slowed down by the fact that it had a bunch of path dependency, right? A bunch of technical debt. They couldn't rebuild the whole thing from scratch. And so I think there was like a bunch of nuance in that story. But Solana was just like the first set of folks to pull it off, and that got me really excited.
Yep. No doubt the market has been rewarding the composable kind of Web3 idea, right? Like we've seen a lot of these fast, cheap, really well designed chains that have had a lot of success. We are still extremely excited about the idea of spreading this ecosystem to thousands of chains, whether rollups, network extensions, individual L1s, etc., purpose-built, niche-built, etc. So very excited to kind of see this roll out in addition to the scaling that's coming from Firedancer, that's coming from updated clients. I know we just had Max on. Him and Logan are very focused on some of the multiple proposal work. So a lot of really, really cool stuff. And again, great and interesting background, Armani. Guys, it would be remiss to not talk about the elephant in the room today, which is Mert's prolific shit posting over the last 3 to 4 days. I mean, with the market in the gutter, the absolute chuckles that I've been having from reading Mert's macro takes have just been, it's just been too good. So Mert, what's going on in the market, man? Are we fucked? Is Solana still going to 500? And how are you such a good shit poster, man?
Jesus. Okay. Well, a few things there. What's happening? I think what's happening now is relatively clear, probably stupid, but clear, which is to say that Mr. Trump wants other countries to pay them more. And then the other countries say, no, we're also big and scary and tough, so you have to pay us more too. So everybody raises all the tariffs, and then the only people actually doing the work, which are the businesses, get fucked temporarily, it seems. And so as a result, people take money out of the markets. And what's funny about this is like, there's been macro wins like this for a while. And like Solana has been going down, and ETH has been going down, and Bitcoin has been going down. I mean, it hasn't been 100K in some time now. But then people would blame it on the silliest shit, like pump.fun. Like it would be like, oh, well, Solana's now below like 150. This is all because pump.fun sells their tokens instead of holding them for whatever reason. And so I've just been saying, like, now every time the economy goes down, I'm like, thank you, pump.fun, or like NVIDIA. And so there's not, I think macro is like relatively suited for astrology types, but I don't think I have too many meaningful things to say about it, except for yesterday. Of course, the contrast in meme coins is very interesting in that somebody just tweeted, just one tweet, about how Trump allegedly said that the tariffs on other countries can stop, but the ones on China will stay. And within 4 minutes, 5 minutes, something like this, the markets added roughly 2.5 trillion in 5 minutes. That is, for reference, that is more than the entire market cap of crypto. So just to give you some idea of scale. And then it was fake. And so 5 minutes later, everything tanks back again. And so then I was like, okay, so this is basically just meme coins, but with suits. And that went viral for some reason. I'm not too sure why. The thing with tweeting is you just never know which ones are going to hit. So I just say everything. And yeah, that's where we're at today. In terms of what that means for crypto, I mean, this doesn't feel like any of the last cycles in any way to me. When like roughly all the past crypto things have been due to some implosion within crypto. Maybe at first it was just like there was no use cases and it was all Ponzi's. Perhaps not so different, but certainly an improvement. And then it was just blow ups. Some exchange got fucked, or the other one was a scam, or both. So like when FTX happened, for example, I had no concerns, but everybody else did. I had no concerns just because if you just look at it, the world as the way it is, still nothing really scaled or worked as well as Solana, especially like 2.5 years ago. Now you can make the argument that there's viable alternatives, definitely. But back then you really couldn't. But so, okay, now, so I was just in New York, and now the sentiment is completely different. Like, this is why it's a mistake to conflate your thinking with like too much historical overfitting and saying like, well, past cycle did that, past cycle did this. There's been like 3 cycles. So crypto is still quite early, but more than that, not just crypto, but smart contract platforms at scale are extremely early. I mean, they're like, what, 3 years old maybe? And so now, because the institutions are so slow and have very long sales cycles, they already started the process a few months ago, and now they're kind of in full force. And so this is roughly the highest amount of inbound we've had from institutions and exchanges and all sorts of fintech companies, financial institutions, like more than actually in the bull. So there's like the sentiment that, oh, there's a red thing on my screen and it's a candle and it looks kind of gross. But then there's like the reality of it, which is these companies are actually basically all coming on chain. And even though Trump nuked everything, which I suppose would be relatively temporary, uh, he did still do a lot of good work for crypto, in that, all these lawsuits against these exchanges start being dropped. Um, and there's like a crypto czar now. Now, I'm not going to comment on how you get on that list, because, Ripple and whatnot is on it as well. But overall, I think this is extremely good time to buckle down and start building again.
Yeah, it seems like this is the biggest like bifurcation of reality in terms of fundamentals versus price action that I've seen in a long while. The removal of a lot of the investigations was particularly bullish. The ETF news has been insane. I've never seen so many filings from legitimate companies. Like Pengu got an ETF filed, which is just, now we'll see how these kind of play out. But there's just this constant institutional pressure. I'm moving to New York as of I have a flight out of Brazil today. I'll be in New York in a week. So I'm just trying to take advantage of that atmosphere and just kind of be in that headspace, because I feel like there's just a huge difference, right, in between what's going on Twitter as well as in the market versus the way that these guys think. And I mean, I kind of feel like we finally have like this like career risk neutralization. Like in the last 7 years of working in crypto, it's been like a consistent, like, especially after 2017 bear market, I was like, holy fuck, like, is this going to come back? Like, am I going to have to find something else? And I did. I went and kind of did some other online marketing work and then came back in like 2018, 2019, into 2020 when Rob and I started this. But, even in the last bear, it was like, are we going to make it through? And so now it just feels like there's a bit of this kind of like career risk neutralization, and just generally the longer term thinkers will win. But I also think that the institutions bring a sense of legitimacy, which then also makes the power law strike harder in terms of which projects win, which projects execute, and who kind of survives. So I think there's like both this positive pressure from this kind of, okay, guys, like it's safe to build in crypto. You can actually be kind of public, presentable, go out there and kind of do the thing. And, shout out to all the people who've been doing this for the last 10 years, without this kind of neutralization. But then it also feels like there's this aura of like the market is much more sophisticated, right? In terms of new token launches, in terms of what people are expecting, in terms of what people are aware of with VCs or with this and that. And, so lots of interesting factors at play. Armani, just want to kind of anything on that point on the macro side from Mert's perspective, or what I added on there, and then we'll kind of drill into some of the nitty gritty around Backpack and Solana.
I think one of the notes that you're hitting is this kind of convergence of worlds, where I think you have this very large group of very crypto native people that have built all of this incredible technology. And ultimately what we're building here, I mean, you can look at, the metaverse, you can look at NFTs, you can look at kind of social stuff, but ultimately like what most of us are building is financial technology. That's ultimately like why Bitcoin was created. That's ultimately, I think, like what a lot of DeFi is, right? It's new market structure that exists simultaneously everywhere, but controlled by no one and no individual kind of place. But the thing about finance that's a bit odd is that it's not useful by itself. And you kind of had this before all this, like the institutions are coming meme, like really came to kind of life over the past couple months. You had this, very opposite sentiment where there was this almost like depression around DeFi, where you had, folks like Vitalik or even like, Anatoly or whatever, like commenting on like the Ouroboros, where, the snake eating its tail thing, where it's, you have, all this DeFi tech, but ultimately, like, why does it exist? Like, why are we doing this? Why are we exchanging all these meme tokens? Why are we like building yield farms for, going back to 2020, like vegetable tokens that emit more vegetable tokens that go back into the vegetable token protocol? It's just like circular, and there's nothing real actually being built here. And it's because it's finance tech, right? And finance isn't useful because it's just an accounting system to like move like, representative bits around. What actually matters is like the atoms in the physical world, right? The goods and services that like, the people that made the lights in this room, or that like, go and farm the crops, or that build, our homes. Like that's actually what matters. It's the real world. And so now kind of, we all know how to build markets. And one of my views of not only what's happening, but just like one of the most valuable things to do in the industry right now is, well, we need to bring more and more value kind of on chain. And, Mert said this incredible statistic, earlier, where we kind of more value than all crypto like went up and down in the blink of an eye because of one person's tweet. But I like to give the statistic where all of the value in crypto is less than all of NVIDIA's market cap. It's meaningless. Like it's genuinely a meaningless drop in the bucket relative to everything else in the world. And I don't think any of us think that it's going to stay that way. I think we all think that it's one of the most important like technologies that's going to underpin kind of the global financial system. But that's the world that we're heading towards, and we're a long ways away. And one of the really big leaps to getting there is not just like the technical problems of like how do we scale blockchains, how do we build decentralized exchanges, how do we do like on and off ramps or whatever, but it's about bringing assets on chain. And like stable coins are like the first like really strong, very like obvious example of this. But I think it's just going to continue to happen, and I think that's ultimately how we've positioned ourselves in Backpack, and why we've made a lot of the decisions that we've made, is because you can't just pretend like the real world doesn't exist, where you have all these different countries with all these different rules and all these different regulations and all these different assets, whether it's equities in the US, whether it's bonds by municipalities, whether it's retirement accounts, whether it's different currencies around the world, whether it's real estate in different places around the world. Like you need to go get all of that value and put it on chain so that we can breathe life into kind of all this incredible kind of stuff that we built over the past several years. And I think that convergence is like really what you're starting to see, and really I think why I'm so excited about the institutions are coming meme. And as this happens more and more, as like the real world, if you want to put it in those terms, kind of converges with the crypto world, it becomes more and more normalized, and crypto, starts genuinely telling the story of actually upgrading the financial system. And it's only with the real world can you do that. And so I think that's kind of maybe some added color on what's happening. And I think one of the things that gets me really excited.
Yeah. I think you're absolutely correct. And I think just to kind of like illustrate like why this value ought to come on chain, it's not just because we built it. Like, yeah, we built it and we want to see people use our stuff, but it's because it's actually better than the old stuff. Like, I like to say that blockchains are the best coordination tool that exists. That's for robots, that's for AI-driven economics, that's for human-driven economics, and generally coordination goes for risk management, goes for staking and slashing the allocation of scarce resources. All of this can be made more efficient and more transparent and more visible, and we can do that through blockchain. I think right now we're seeing this flight to safety on a macro scale, and that flight to safety, goes towards cash, bonds, gold, and then digital gold, and Bitcoin gets swept up into that. But then on the other side, you have basically tech stocks, which goes for like the entire rest of our industry, right? That's where like ETH, Solana, all the rest gets bottled in. So Bitcoin is kind of like the bridge from like the colliding of these two worlds. We're seeing crypto get grown up. Like it's reaching this level of maturity where it is becoming integrated into the rest of traditional finance. And we're seeing that bridge between the DeFi world and the TradFi world. Bitcoin is that bridge. Ultimately, Bitcoin dominance is rising. And the way that these cycles at least have gone in the past, maybe this time is different, but it always goes through Bitcoin and then from Bitcoin to the rest of the crypto and blockchain on-chain world. So I guess my question is this time different? Like, do you guys think that with the institutional adoption on chain and all the value being put on chain, we will start to circumvent Bitcoin and we won't see like Bitcoin dominance rise. We'll just see it go directly into these like tech platforms, being the ETH, the Solana, the Monad, like all of these, L1s, L2s
Yeah, Mert, he's
applications.
basically asking when alt season.
Well, it's a very packed question, I would say. But so if the question is something like, will it be the case that the alts like Solana and all the others, will they need Bitcoin to lead some sort of rally for them to come back, or can they do it on their own? And it's an interesting question. I personally think they can do it on their own, and I think there's a few different ways of looking at that. One is that if you so historically speaking, let's say for the past 8 years, Bitcoin, it was supposed to be digital cash, P2P cash payment system, right? Something like this, and then Lightning and all that. I mean, that's on the white paper. But then it's like, okay, that's actually not really working. However, it does turn out to be a pretty solid like digital gold alternative, which is what even Besant, literally the Secretary of the Treasury, he said that like 2 days ago. Which is so. I mean, job is kind of not done, but it's certainly found PMF within that segment where people value it as gold in some sense. Now, it's still a risk asset, so it's not completely decoupled. So, the other day everybody was like, how come Bitcoin and crypto is decoupled from this? And then like 10 minutes later, they just all nuked. So it's certainly not completely decoupled. That being said, my point here is, in the past, that's kind of been the main use case of crypto, which is like this store of value thing that's relatively detached from, or let's say like 20% detached from existing markets, and plus a lot of belief required for it to for someone to make the case that it will completely decouple in some 10 years or something. But if you now look at the integrations that are coming with stable coins and payments, and even things like going public on chain, internet capital markets, even ZK, all these things, then those don't require Bitcoin, and they're kind of directly work with the underlying tech company. Let's say, I'm sure some people will take that out of context and be like, oh, he thinks blockchains are tech companies, but like fundamentally, that's probably how most people think of them on the macro. And so in that case, then I think this is the best shot there's ever been where they can decouple themselves to an extent. I don't think that happens this, quote unquote cycle. I think that takes a long time to really meme into existence. Like, I was just in New York and people were, maybe that's actually a useful anecdote. People already knew what Bitcoin was, but then they would ask me something like, why should I invest in Solana over Bitcoin or Ethereum? So like in their mind, it's something like Bitcoin is one thing, and then Ethereum versus Solana is another thing. And then maybe they like bundle Coinbase in there with like actually the public stock Coinbase, but also Base, which might have like a synthetic version of it soon. So it seems like it's already happened. In like just pure physics of this, Solana's market cap is like 55 billion, right? So it's really not much. So really all you need is a few relatively heavy-handed institutions to like do things with them and hold capital on those chains for them to really do a rally. So I don't think it's necessary at all that Bitcoin needs to lead the charge anymore, because I just don't think they do the same thing. Like they're all blockchains, but Bitcoin is just super different now. Now you can make the argument that there's these new L2s that tap into Bitcoin, and like that's correct, but I'm not sure how those L2s benefit from it more than Bitcoin, which is fascinating because on the Ethereum side, it's actually kind of the opposite, whereas like the L2s benefit maybe slightly more than Ethereum itself.
Yeah, it's an interesting paradox. And then when the institutions are looking at Solana, and I think a lot of crypto participants have been feeling this, and this is why ETH underperformed so much in the last 18 months, was if you're going to buy BTC, it's the lowest risk, it's the best risk to reward in crypto effectively, especially if you're just looking to get allocated. But if you're looking to allocate to a smart contract platform, buying ETH in the last bull was clearly not the right idea because, well, it's already a couple $100 trillion market cap, and Solana is just faster, better, cheaper, and has way more use cases for this current iteration of crypto, right? For all the memes, all the DeFi, all the fast transactions, it absolutely crushed. And so ETH was kind of stuck in this, in between a rock and a hard place there for the last 18 months, trying to kind of figure out where it's at. I do think the institutions are going to help a lot with Ethereum. And I think Ethereum is going to make a really, really big comeback price-wise. We were speaking to Arthur Hayes last night about Ethereum and about these L1s and smart contract platforms, and we spoke about how, I mean, it's got the worst sentiment in its history. It's going down to like 2017 levels, and he made a bold prediction that he thinks that Ethereum is going to be after kind of Bitcoin makes its big run, then, and Rob, perhaps this answers your question. He said this time isn't going to be different. He thinks Ethereum will lead the next part of the rally due to the hate from others and just the institutional kind of adoption that it could get. But that being said, I still think institutions will look at Ethereum and be like, look, it's worth what, 300 billion now? I may have set up and said trillion earlier, whereas Solana is worth 55 billion, Hyperliquid's around 12, and Celestia is trading around like 3. Like, where is the long-term kind of perception of making this like feel like institutions are early, or they can get some value out of this? I just think it's a lot harder to see Ethereum to, 1.5 trillion than it is to see Solana to 500 billion, Celestia to 100 billion, Hyperliquid to 100 billion, et cetera. So, yeah, that's just kind of my 2 cents. I'm curious what you guys think.
Maybe this can help answer your question, Andy. I'm thinking more on the technical angle, helping institutions realize that they are still early to the technology, but it is resilient. And that they almost, if they're choosing to adopt a particular L1, they're getting the entire ecosystem. So, Mert, I think you pointed out this dynamic between a network and its rollups or its network extensions. Like, Bitcoin rollups are currently getting like more than they're delivering back to Bitcoin. You could argue the same thing for Ethereum rollups. Ultimately, there are these naturally occurring symbiotic relationships, mutualistic relationships that exist in the wild. I'm not a fisher, but the only fish I ever caught was one of the ones that swims next to the shark, and it eats the little like bugs or stuff off of the shark. And like the shark gets a good deal out of it. Like, it gets like the stuff cleaned from and then the little fish gets to eat. So like, this is a very mutualistic relationship between the shark and the fish that exists in nature. I think this mutualism could occur on chain with respect to L1s and L2s, but we're just not really seeing it play out. So I think, like, Andy, your question is like, why is this still a valuable bet for institutions? And I think it's because they get this entire bundle. Like, if someone buys Ethereum, they think they're getting Ethereum and all of its rollups. They kind of put aside that a lot of these rollups also have their own governance tokens. But that, from what I understand about the sentiment, like the institutional sentiment, is that when someone thinks about Ethereum, they think about all of Ethereum and its rollups. That is all Ethereum, regardless of the value transfer and the value accrual methods there. Same thing. They're not there for Bitcoin, certainly. And I'm curious what you guys are seeing as a perception of Solana and its network extensions. I would imagine it's more similar to Ethereum and its ecosystem than Bitcoin, in the sense that when someone thinks about Solana, they think about all the network extensions as Solana. So I guess 2-parted question: what is the sentiment with respect to Solana and its network extensions? And then how do these network extensions and the Solana L1 make sure to enable this mutualistic relationship between them? RedStone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. RedStone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the RedStone exhibition today. Innovating finance, global, institutional, and on-chain.
deep liquidity to drive capital efficiency. Now, maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle. Ladies, gentlemen, Anons, and Degens, it is stablecoin season, brought to you by your favorite, the best in stablecoins, Frax. USD dollar stablecoin backed by the best in the business, the Biddle Fund by BlackRock and Superstate. This is stablecoin season. It is the yield-bearing stablecoin by Frax, coming soon to a chain near you.
I think I would go back to like the heart of this question, which was kind of rooted in Bitcoin leading rallies and can the alts lead themselves? I think it's really simple. Anybody can lead any rally. It's just a function of like who reaches escape velocity with respect to getting product market fit in some specific niche. The reality is that everything is a meme coin right now. And Bitcoin is the first and the original and like really the only true genuine meme coin in the most like pure sense. And that's why it is the store of value. And so as long as everything is a meme coin, Bitcoin will always be the upper bound for value for all these crypto tokens. And so when you're analyzing, you made this like relative valuation analysis between Ethereum and Solana, and it's like, well, Ethereum's already so high, Solana and Celestia and these other things are already so low. Like, obviously, you're going to bet for the lower ones because they can they have more room for growth relative to Bitcoin, and it's because you're capped at Bitcoin. And then the question is, well, like, actually, how do you get around that? And what's the story for Ethereum or any other chain for kind of having this enormous growth potential? And the answer, it's really simple. Product market fit, real use cases. And that is, I think, has to be the story for any smart contract platform. And it really only takes one company, one use case, one protocol to reach escape velocity. It's why I'm like always so bullish on like literally any L1 founder that's crazy enough to create an L1. It's because you literally just need one app. You just need one Instagram moment, one kind of Uniswap moment, and that can create the growth that you need. And it's like really trite to say that like we're early or whatever. But the reality is that if you want to have that type of breakout alt-led growth, I think it's going to come down to, do you actually have a global worldwide use case that everybody on the planet is using, whether it's institutional DeFi or stable coins or whatever it might be, but it comes down to product market fit, which is like not surprising at all.
Yeah, I mean, I kind of think that the network extension thing is kind of orthogonal to the thesis, but Mert, maybe you can kind of fill me in there. And I think the more institutional pitch for Solana has got to be around this global data synchronization at the speed of light concept on like this kind of idea. Yeah, Mert, have you been having quite a few conversations with institutions around Solana and Helius? And what has been the kind of what they have liked that you said and maybe like didn't understand, or what are they kind of catching on to?
Sure. Well, there's a few angles. One is that fundamentally, and of course it depends on the institution and their competence, but fundamentally they're trying to move money from point A to point B, or they want to enable some, if there's an existing fintech app, something like Robinhood, and they want to capture some new user base or expand within that, which is, you saw them expand into prediction markets for one example. But so it's generally something like, we want to work with stable coins or RWAs, or we are some fintech app that's maybe a bit more maverick, like a Klarna or like a Robinhood, or a fintech in the US or Brazil, something like this. And so in the former case of asset issuance, they generally actually all have a multi-chain strategy from what I've seen, which is to say, like, so for example, you saw the BlackRock stuff. They obviously are on Ethereum, but the actual issuers behind that, Securitize, just announced that they're expanding to Solana. And that's not the first time. Like Visa did this, PayPal did this, MasterCard did this. I think Stripe did this as well. Google, like all these institutions, they basically don't want to take this risk of just doubling down on one chain because it doesn't make sense for them. And so then they just look at like the top two, top three. So it generally ends up being Solana and Ethereum. And you can also see this with the institutional investors like a Van Eck or Franklin Templeton. Their investments are generally something like Bitcoin and then Solana, Ethereum, and then maybe like one wild card, like a SWI or something. So that's the RWA in issuer side. But for them, fundamentally, they need the product to work. Like they need compliance controls. They need the payment fees to be predictable and stable. They need to have some guarantee of security. And that's generally what they ask questions about. And then you have the guys who are a bit more, they're like Web 2.5, let's say. And those guys care about basically who courts them, is what in my experience. Like they will, as long as you have a good B2B sales team, you can basically close them. You can kind of see why Ripple and Stellar and all these guys, they have a lot of these deals, by the way. And if you look at their structure,
So classic,
it's like
man.
it's like 60 BD guys and like one engineer on those teams. And it's like, okay, I wonder what's going on
Armani's
here.
worst nightmare, literal worst nightmare.
And so it's a combination of that, but like fundamentally, you can only do so much with BD before physics catches up to you. Like it needs to work because your users will just not use it. Like if it sucks, right? So then it becomes so for those, I think there's some asymmetric upside for the and this is why Base is important for Ethereum because they have that B2B team, right? They do sales. They know sales very well. This is why Solana has teams like Helius, but also Jito, who is putting in a lot of work at the top-down level, right? Policy, governance, but also like chief commercial officer just hired from Jane Street yesterday. So those are the
and Nikita, I think is his name.
Yep.
Just joined the foundation as an advisor. So Solana's doing some Ripple style BD too, if you know what I mean. Just a little bit, just a little bit, you know what I mean?
BD, but with actual talent. So I know some guys from Ripple. They're probably gonna fucking destroy me after this, but it's what it is. But okay, so then the interesting part, I think Armani kind of pointed at this, which is like in a world where everything is a meme coin, which is probably the case today, then Bitcoin is the ceiling, obviously. Like that is, it's not like a pure meme coin, but it requires a lot of social elements for it to actually function. But interestingly, I think if you accept the premise that these are maybe a bit more like tech stocks, the L1s or alts, then people actually do start to look at some traditional things like how much money does this chain make? And then as a stockholder, let's say, of this chain, like a token holder, I hold the token, do I actually get any of that back, right? Like if I stake on Ethereum or Solana, like what happens? Do I actually make money? What's kind of the upside? And that's actually turns out to be really important. You might have seen there was some discussion around this proposal on Solana called SIMD 228, which basically said we're going to reduce issuance on the chain by quite a bit. But one of the objections from the president of Solana Foundation and of quite a few institutions was that actually, wait, we kind of like the high staking yield, even though it's from issuance, right? Of like, 8 to 9%. And so they do start, and this is why like, I think Rev, which some people don't like, but it's clearly at least an okay metric, especially compared to all the other ones that can be easily be faked. Rev is a little hard to fake, and especially if it's sustained. And it's some sort of a proxy for demand, but also some sort of a proxy for like economic accrual to people in that network. And so you can then start to be like, okay, you can actually glimpse at some fundamentals. I think that's probably still some time away. And then that's perhaps where the network extension stuff comes in, right? Roughly the biggest difference in my view versus, when people launch an L2 on Solana or something, there isn't much, but there's like different flavors of it. because it's just a different architecture. So it might be for storage, right? Or it might be like, something called an ephemeral rollup, where you spin it up for like one thing, do the execution, and then roll it back up. The biggest difference is that Solana, the L1, doesn't care. It basically says IBRL, increase bandwidth, reduce latency. We don't give a shit what you do on top of this block space at all. All we care about is doing as much stuff as possible on this one thing, because that is very clear incentives for people on that network, economic incentives, but technical incentives. And so it just makes a lot of sense. Now, if you think it's not technologically sufficient for some use case, that's okay. You can do a network extension if you want, and then you benefit from those assets being on the L1. Because, me and John Char wrote a piece on this, and I was one of the editors. Basically, one of the main benefits of an L2 is that there's already a valuable ecosystem on the L1, and now you can extend it, which is why Bitcoin L2s are interesting, because Bitcoin is super useful. Same with Ethereum. It has all those assets on the L1. Versus Ethereum doesn't say, whatever, just do whatever the hell you want. We're just going to scale the L1. Ethereum actually kind of says, we're going to change the L1 to cater to L2s. And so, that roll-up centric. But like, you got to be careful that fundamentally, when you say something like the word roll-up centric, it sounds like it should be centered around roll-ups, but the roll-ups still need to work with the L1. And so it doesn't mean forget the L1, which is probably where you're seeing all the problems today. I think, one of my hot takes is that if you take care of the L1, then everything else will kind of take care of itself in the long run. Because, like, even if you do what Ethereum is doing, then over sufficient time, I think you do get viable alternatives to people who've already shown they don't care to use something like Celestia, right? They can just do a sovereign rollup or something like this. Like, they don't care too much. And then that's when the incentives and the economic, let's say, fundamentals become a little blurry. So with regards to network extensions, the final I'll say on this is, like, the biggest difference between Solana and all other ecosystems is that Solana core doesn't care. Like, it just says, if you're going to build them. We're going to focus on what we're doing the whole time. Versus other ecosystems might be like, we're going to tailor our solution so that you as a rollup can benefit from it, right? So it's much more like, it's much more opinionated.
Yeah, I think generally we are on a page of being bullish on opinionated design. I think, again, I was speaking about the dynamic between BTC, ETH, Sol in terms of investing appeal to people. And I think similarly, if you look at the technical designs, you can also see the direct, like low level focus on a single trade-off and just fully maxing that out. I think that the market has been basically seeing that as something that has been improving the performance, UX, and just general appeal of Sol, the token, as well as using and building on Solana, the chain. I'm a little bit tired of the dot funds. I think the dot fund may be a little bit overdone by now, but we can talk about that a little later. What I do think is interesting, and this ties into what you're doing at Backpack, Armani, and kind of what Mert is touching on, is that the Solana ecosystem appears to be growing in such a way of many super apps per se. So when we think about this idea of what is the best products in crypto, a lot of people think about wallets, exchanges, stable coins, and some sort of like mixture of these, whether it be on your own chain, on a really fast, cheap chain like Solana. And so Jupiter obviously has been the massive trading venue for all of Solana. But recently, Pump.Fund, they actually moved off of Radium. They moved PumpSwap. Jupiter has added different product suites. Camino has just added a aggregator onto their platform. And so we're kind of entering this world in the Solana ecosystem where it feels like there's a lot of competition to be the super app. So I'm curious, like, what is the Backpack thesis for why you built out this platform where you own the end user distribution, right? And the wallet level, kind of fat wallet thesis, if you will. You can funnel these users into your exchange, right? Where they trade, earn fees, use that for buybacks, use that for kind of other financial incentives, and then kind of how do you see this flywheel picking up? And yeah, just talk to us about your success as of recently, because you guys have been cooking.
Yeah, sure thing. So, I mean, I think the Backpack Thesis is a bit of a counterintuitive one, especially for folks that are kind of maybe even deep into crypto. So, I kind of mentioned this pretty, catchy, headline earlier, where all the value in crypto is less than Nvidia's market cap, right? And I think there's two versions of the future of this industry, in my view. One version is we more or less stay where we are today. We're more or less kind of an unregulated, offshore, speculative gambling casino where the predominant use case is basically, trading useless assets on chain, and you can make a great business. Gambling is consumption. It brings people kind of, happiness, sadness, depending on kind of your view of gambling. But gambling is like a real thing, and that's kind of where we kind of get capped at. I don't think any of us believe that. I think we all are kind of. I think all four of us on this call probably, if that were the case, we'd all pick up and move, like, our businesses into AI or something, or we'd go work on something else. And I think for me personally, I kind of have this very fundamental view that this is finance tech, and crypto is going to bleed into finance and be ubiquitous with every major financial institution in the world. And it doesn't matter what country you're from. It doesn't matter what religion you are. It doesn't matter what your politics are. Ultimately, we can use these like trust minimized computing machines to transact and exchange value and all around the world. And then you might ask the question, okay, well, what are the companies and protocols that you build in that world, where the trillions of dollars in traditional finance is being kind of tokenized and transacted upon on chain? And where I land with is you ultimately have one of two properties. Either you are fully decentralized, fully censorship resistant. You represent everything that is the best of the space. The Uniswaps of the world, the Ethereums of the world, the Solanas of the world, where you're so geographically distributed. You have so many people operating this thing. It's simultaneously used by everyone and owned by no one, that the whole concept of like compliance, it's just like an undefined problem. It's like dividing by zero. It doesn't make any sense. Like, how is the US going to impose a compliance regime when you have people running some servers in China which have a completely different compliance regime, which is completely the opposite of what's happening in the UAE or in Africa or in South America or whatever, right? Like, this is censorship resistance. It's like the metaphor I like to give, not to get too philosophical, is that of like an ocean. Right, the Pacific Ocean is like such a powerful medium for exchange. The U.S. can send boats and shipping containers to Japan. Taiwan can send ships to kind of the U.S. China can transact with Japan, and nobody thinks that any one country is going to all of a sudden blow up a ship or whatever because it controls the Pacific Ocean. The Pacific Ocean works because nobody controls it, and that's how you can create like amazing kind of human coordination. And so I kind of have this fundamental view of blockchains as being these kind of new like natural mediums that kind of just exist and are kind of omnipresent for financial transaction processing. So censorship resistant is a very clear, like very important property. The other very clear, very important property, if we want this industry to actually be meaningful in our day-to-day lives, is compliance. Where, okay, if you are centralized, if you do control something, if you can turn the thing off, if you can, control, people's money, even if you can, maybe reorder their transactions, you can shut down, the matching engine or whatever. Turns out you're going to have to, you are physically located in a country, and there's a government, and there's a nation state, and there's an army, and there's a rule of law, and you will have to follow the rules and the regulations that are imposed upon that country or whatever, right? And it sounds like such a silly thing to say if you're like coming from outside of crypto. It's like, yeah, duh, like you follow the law or whatever. But I don't think this is something that most people have wrapped their heads around. that are very crypto native, because we've grown up, so to speak, professionally speaking, in this industry that has had no concept of clear rules. And so we've all kind of been trained in this like very kind of a counterproductive way where, like, rules don't matter, that's all kind of fake or whatever. But it turns out there's like ramifications, right? If you, go like serve, maybe CZ is like maybe the best example of this. You serve North Koreans, you go to jail. Right, or maybe that Ethereum developer, I forgot his name, Virgil, is like another great example of this, right? Like, there's real consequences of this stuff, right? And so I think compliance is like the other really important thing, where if you're going to actually have the trillions of dollars of value that exists in the world running on chains, that is rooted IRL, right? That's rooted, Apple exists in California, right? They have to follow, whatever rules are happening there. And so you have to have one of these two things. You either have to be censorship resistant or you have to be compliant, and anybody in the middle is kind of on a road to nowhere. And I kind of like strongly believe this with every bone in my body. And so kind of, the Backpack Thesis is ultimately, well, there's not a lot of crypto native people that are going the compliance route. There's a ton of incredible builders. You named a bunch of them, the Uniswaps, Jupiter, Camino, you name it, that are building great censorship resistant tech. There's not a lot of crypto native folks that genuinely care about, like, what we're all building here, that are crypto native, that are great at product and really want to build kind of a crypto native version of finance. There's really not that many of them going the compliance route. And so that's kind of where we're trying to position, and there's a lot of really kind of great product that unlocks that I think we can contribute to the broader crypto ecosystem at large. But I think that's like really the foundational moral context for why we're building the company in the way that we're building it.
Anything to add there, Mert?
Nope.
Cool. When it comes to actually implementing the vision with regards to compliance or with regards to effectively opening up your technology to a new audience, what's the strategy there?
Yeah, so I
what's
mean,
the straight up like tech and business strategy?
Yeah, so there's a couple things. So I think the single most important thing for us is liquidity, because once you get liquidity, then everything else follows. Ultimately, like, what exchanges are these liquidity hubs, where you're connected not just to one chain, but you're connected to every chain, and you're not just connected to every chain, but you're connected to fiat on and off ramps, but not just fiat on and off ramps in one country, fiat on and off ramps in every country. And it really is this very special product that sits between two economies, where you have, the traditional economy on one side, the traditional banking system, and you have the crypto economy kind of on the other side. And so, like, the first order goal, if you want to actually, achieve what we're trying to achieve, is like climb this liquidity mountain. Because once you kind of can build and spin this ball of liquidity, whether you're trading perps, whether you have, spot assets, whether you have just dollars going on and off, straight to wallets, you can then use that position to build really great product. You might ask the question, like, stable coins, for example. How do you build a stable coin? It's no surprise that every big stable coin had a centralized exchange. USDC had Coinbase, USDT had Bitfinex, and that is not a surprise at all. And stable coins are the first example of a real world asset where you have, Circle doesn't call themselves a centralized exchange, but they're a centralized exchange for all intents and purposes, putting Coinbase aside, right? You deposit a token in from one chain, whether it's Solana or Ethereum, and you can withdraw to and from fiat or whatever. You're basically converting one currency to another currency, or wrapping an asset. It's an exchange. And that kind of liquidity is what allowed them to get distribution on USDC and actually created one of the most important products in the industry today. And I think we will see this play out with more and more RWAs as we go along. And you might ask the question, well, like, Armani, there's all these RWA companies that have been created. Why don't any of them work? Right? Why aren't we all using tokenized securities on chain right now? It's because nobody has the distribution element. Nobody's built that, like, what Coinbase did for Circle, nobody has done that for RWAs yet. And so the first order goal is spin that ball of liquidity and build a really kind of very deep exchange, because from there, kind of everything follows. And then you can start talking about wallet tech. You can start talking about RWAs. You can start talking about remittances and payments, and all these other really compelling use cases. But it all starts at the exchange, and it all starts with liquidity.
I think the idea of having this user facing aspect, right? Wallet and just this place where people come in, exchange, stablecoin is like this trifecta of effectively building a crypto business from a real revenue perspective. And I mean, frankly, that's where we're headed. And teams that don't have that distribution are going to struggle. Teams that don't have a consistent way to use this liquidity are going to struggle. And I mean, ultimately, whether you need your own stablecoin or your own kind of form of currency is also, you know, a question. But I personally have been very, very impressed by just the last 3 to 6 months of what you guys have done on the user side, and I'm excited to continue using and just scaling that user base for institutions, for Solana, and you know, for the rest of the space. So we're about out of time, guys. I think I'm out of questions. Rob, do you have anything else for the guys here?
No, this has been great, guys. Thanks for joining. I think that we're ultimately headed in the right direction. Like, there's a lot of undercurrents that are happening that are just adding to the conviction that I think we've all had for the last, you know, several years. Despite some of the macro headwinds, as we get a little bit more integrated into traditional finance, keep building. Like you said, Armani, like, Backpack hit its all-time high in terms of volume yesterday. So congrats. Like,
Nice.
volatility is great for exchanges. This is ultimately where we're headed.
Yeah, boys. Thanks for entertaining the more speculative style podcast today. We're going into the tech and then in and out of the tech and into some of the more mass market stuff. So stay tuned, and thanks for joining, boys. Cheers.
Thanks for having us.
Thanks, guys.